Welcome again to daviddalbylive.com in association with TalkShoe, and we're going to be looking at the book Reminiscences of a Stock Operator, and we're on page 119, and we're going to be talking a little bit more about the experiences of Jesse Livermore. And in this one, let's just start page 119. If you need a copy of this book, I recommend that you get it, and I recommend that you read it every year. Reminiscences of a Stock Operator, a fantastic book on trading, investing and the markets, and also psychology. If you are thinking about investing in your particular country, then it's best to seek professional advice in your own particular location, due to the differences in laws and things like that. And it just mentions here, Jesse Livermore on page 119 says, "The recognition of our own mistakes should not benefit us any more than the study of our successes, but there is a natural tendency in all men to avoid punishment. When you associate certain mistakes with a licking, you do not hanker for a second dose, and of course, all stock market mistakes wound you in two tender spots: your pocketbook and your vanity." So here, Jesse Livermore points out that our own mistakes might not benefit us, even as our study of our successes might not benefit us. But we are definitely wounded when we do make mistakes in our pocketbook and also our vanity. And one of the reasons that I found in my research why we tend to suffer these mistakes or wounds is really through stock market timing. We might actually be right. We might actually buy the market, be long, but it's not at the right time. We get stopped out, or the trade goes against us, and we have to get out as early as possible to cut our losses short. And as Jesse Livermore goes on in the book to talk about, many people tend to hope too much that the stock market will come back, or that the particular stock will come back, and it never happens, or very, very rarely happens. And the other one is, of course, vanity, ego, and we don't like to be wrong. Human beings like to be right. So that's when often small losses turn into large losses, when we try to be right. But if you've bought at the top of the market, you will never be right, and you will lose a lot of money. So anyway, let's go on. He mentions after that, "But I will tell you something curious. A stock speculator sometimes makes mistakes and knows that he is making them, and after he makes them, he will ask himself why he made them, and after thinking it over cold-bloodedly a long time after the pain of the punishment is over, he may learn how he came to make them, and when and at what particular point of his trade, but not why. And then he simply calls himself names and lets it go at that. Of course, if a man is both wise and lucky, he will not make the same mistake twice, but he will make any one of the 10,000 brothers or cousins of the original mistake twice. The mistake family is so large that there is always one of them around when you want to see what you can do in a full play line." To tell you about the first of my multi-million-dollar mistakes, I shall have to go back to the time when I first became a millionaire, right after the big break of October 1907. So Jesse Livermore here is pointing out that even if we manage to avoid a mistake, there are plenty of other sort of mistakes that are related to that mistake, which he calls cousins and brothers. And traders often find themselves making these sort of mistakes, and a classic example would be not to watch the highs and the lows. Many raging bull markets are a bit like boiling cauldrons. I like to think of them as boiling cauldrons, bubbling away merrily, and there's a lot of excitement and people are making money, and I've made quite a bit of money, and you know, even the people who aren't really followers of the stock market, you know, like shoeshine boys or whatever, are giving you tips, you know, on the latest and greatest stock, and that has happened, you know, throughout the last